Welcome back, everybody. I hope you had a good day. So up till now, what we have discussed about is actually the overall audit process, where we started off with the tendering phase of the audit. Then we talked about the audit planning, and when we talked about audit planning, we talked about the risk assessment. We talked about understanding of the entity and its environment. Additionally, what we have talked about up till now has been the audit performance, which is actually how the overall audit operates. So we have also gone through the performance stage of the audit. The next step that we have actually gone through is basically about the review of the finalization stage. And what exactly is a review of the finalization stage? So when we talk about the review of the finalization stage, so review or finalization is actually that the audit manager or senior actually reviews the work that has been performed. So we have done that also, and we went through the audit reporting. So we went through the overall conclusion of the audit. And in the yesterday's class, our discussion was mainly based upon the things that we discussed in the yesterday's class were majorly pertaining to that we talked about the various pronouncement of IAASB, and those pronouncements actually included the ISRE, ISAE, ISRS, and we talked about them that when do we actually apply ISRE, which is the International Standards and Review Engagement. We talked about it that when do we apply the ISAE, the International Standards and Assurance Engagement. We also talked about it that when is ISRS needed. So this is all that we talked about. Then we attempted a question that was majorly a question on the ISAE application. That was a public sector organization publishing several KPIs. So we talked about that also. We are now going to move forward, and we are going to discuss further. So what exactly are we going to discuss further? I gave you a question yesterday, and I asked you people to actually attempt this question. I don't know how many of you would have attempted the question, but let's just have a quick recall of this December 2014 question number. Question number 3 of December 2014. Okay, so it's December 2014, question number 3, part B. The question number 3, part B is actually about discuss the difficulties in measuring and reporting the environmental and social performance, and recommend the procedures to be used to gain assurance on the validity of the performance information in FasterJet company's CSR report. So I'd requested you people to attempt the question. Those of you who could not attempt, just have a quick go through of the question, and then we'll start discussing it. Thank you. Okay. So it says that your firm has also been engaged to perform a separate assurance engagement on Faster Jet Company's corporate social responsibility report. The engagement will be performed by Brown Company's specialist social and environmental assurance department, and there are no ethical threats. There are no ethical threats created by the provision of this service in addition to the audit. An extract from the draft CSR report is shown below. So what is this extract which is shown from the draft CSR report? So you have been given the CSR objective, the CSR target, and the performance in 2014. Now let's just start discussing. The requirement is discuss the difficulties in measuring and reporting social and environmental performance. This is a 4-mark requirement. That means the examiner is expecting you to write 4 points. So what exactly are going to be those 4 points, which is actually about the measurement and reporting. So we need to talk about the measurability and reporting of this performance information. So now when we talk about the environmental performance, so if I could have a quick background of what the environmental performance management or environmental reporting is. A lot of companies undertake the responsibility undertake the role of being socially responsible citizens. So when they do undertake the responsibility of being socially responsible, they do undertake it that they are socially responsible citizens. So what they do is that they undertake a lot of activities which could have a good impact upon the environment. And when they have undertaken those activities, so they make a report of those activities also. So when such reports are being made, so such reports are termed as environmental performance report. Now, what exactly are the problems with them? One of the problems with respect to the measurement of them is that a lot of data is not quantifiable. A lot of data is not quantifiable. I mean, you would come across a lot of environmental information, but that's not going to be quantifiable, or that's not going to be measurable. So it's actually, things are not quantifiable. You also the things are, you don't know how to measure. Also you don't know that what to measure. So these are a few things which are actually an issue with respect to the measurability of these data, that insufficient information is available, or they are not always quantifiable, etc. The second thing is actually about the reporting. So when we talk about the reporting, so let's just talk about it. So whenever we talk about the reporting, so the reporting is always how to report. The biggest problem is how to report, because you don't really have a specific standards, specific formats that how to report these. So you don't have the format because there are no standards available. And the second thing is that the skills are also not available. The skills are also not available. Usually the accountants are not generally equipped with these skills to report on the environmental performance and the social performance. So one of the requirement was discuss the difficulties in measuring and reporting on social and environmental performance, and recommend the procedures to be used to gain assurance on the validity of the performance information. So this performance information which is given here, you need to talk about the validity of this performance information. What do you need to do? You need to talk about the validity of this performance information. Now let's just talk about it. First of all, if we say I would always say that whenever you need to perform validity, whenever you need to look at something, you always need to think what could go wrong. Because whenever you think that what could go wrong, then you can actually perform the procedures to check if that something has gone wrong or not. So ideally speaking, it has to be what could go wrong with them. Now, how would we talk about it? What could go wrong? Number one thing is it was like the donations of 500, the CSR target was make direct charitable cash donations to local charities. It says donations of 550,000 were made to local charities. Now, what exactly could go wrong? Number one of them is 550,000 is not the correct amount. That's one thing. What else could go wrong? Number two thing is basically the charities were not local. The charities were not local charities. The charities were not local. Now, let's talk about all this. So number one of them is $550,000 was not $550,000 was not actually paid, and at the same time they were not local charities. So the company had a target of cash donations. So how would I verify? I would simply inspect cash slips for donation. That's gonna be one of the procedure. They are not local charities, that's another risk. So randomly inspect registration deed of charitable organization. Randomly inspect the deed of the charitable organization. Now what next is there? The second one of them is 800 free flights with a value of $560,000 were provided to charities. So there were 800 free flights with a value of $560,000. They were provided to the charities. Now what exactly do you mean by that? So what exactly do you mean by this is basically, number one of them is 800 free flights. So my question mark is that there were not 800 free flights. So how would I inspect that? I would randomly confirm from passengers about number one, their association with a charity and their traveling. So we need to actually randomly confirm from the passengers about their association with the charity and their traveling. Now what else is there? 800 free flights with a value of 560,000 were provided to charities. Now one thing which is very important when it comes to the valuation of the flight. So one thing which is very important when it comes to valuation of the flight is that you do have an idea that what happens is whenever we talk about a flight, so what actually happens is the ticket prices, they keep on fluctuating. The ticket prices keep fluctuating. The ticket price, they keep fluctuating a lot. So this might actually happen with you in the also, that you are sitting in a plane, and while sitting in a plane you might have paid $100 for a ticket, and the passenger next to you might have paid $150 for that same flight. Now why is that so? Because the ticket prices, they keep on changing. They are not fixed prices. So when the ticket prices keep on changing, so how would we verify that the tickets which were given free of cost were worth $560,000? Because there might have been a possibility that the plane might have been about to fly, and we would have given those tickets to the charitable organization, and the tickets are originally worth almost nothing. They have a negligible worth. So how would you verify? You would verify the price, analyze breakup of $560,000 value and analyze the breakup of $560,000 value and compare with the prices charged to tickets issued at same time. So you need to analyze the breakup of these, and you need to compare them with the prices charged to the tickets issued at the same time. Now what else? So next is basically develop our local learning initiative and offer free one-day education programs to school. So the performance was $750,000 were spent on the local learning initiative, and 2250 children attended the education days. So what can we do? We have a risk that 2250 children did not attend. So what you do is that inspect attendance sheets, number one. Number two is that recalculate expenditures on local learning initiative. And the next is reduce the amount of vehicle fuel used in business travel by our employees, and their performance was that number of miles traveled in vehicles reduced by 5% and the amount spent on vehicle reduced by 7%. So what you could do is that you could compare expenditure on fuel in current year with last year's expenditure. So I hope that this is clear now. Okay, so I think that nobody has any questions with respect to it. So let's move forward now and let's just discuss further. So this is done. The next is basically, I haven't gone through para A because I think that is same pertaining to the matters to consider. We don't have much amount of time, so I would prefer that I discuss various areas rather than actually going through one specific area only. Okay, so the next area that we are going to discuss is going to be the due diligence. So let's just have a quick discussion on what exactly is due diligence. See, amongst the various assurance engagements that we undertake, audit is one of them, review is one of them, and another one of the engagement is the due diligence engagement. Now, what exactly are due diligence engagements? So let's have a quick discussion about due diligence. Due diligence is whenever you want to acquire a company. So before taking a decision to invest in a company, you decide if you should go ahead with this investment or not. So the investor or the prospective investor wants to evaluate if he should actually enter into this investment or not. The engagement that he undertakes for this is considered to be a due diligence engagement. So now what is a due diligence? A due diligence is an engagement undertaken by an investor before investing in an entity. So the engagement undertaken by an investor before investing in an entity is called due diligence. Generally, what happens is, let's say if Mr. A wants to invest in a company called he wants to or take over a Snap Incorporation. So if he wants to take over a Snap Incorporation, then what is he gonna do? Mr. A will engage a firm. Mr. A will engage a firm, and he would say that I would be needing your advice if I should invest or if I should take over a Snap Incorporation or not. And if I should take over this Snap Incorporation, then at what price and at what terms and conditions? That's what we need to hear from you. So whenever we talk about the due diligence, so due diligence is an engagement undertaken by an audit firm on behalf of a prospective investor who wants to establish if he should invest in a company or not. Now, so generally speaking, if you take an example that if you are thinking about investing in an entity, there is going to be several things that you would look into. Now, what are the various factors that we will consider before investing in an entity? So the various factors are going to be is financial statements. The various factors are going to be its financial statement. We'll have to wait for a second. Just wait for a second. Mariam, I have no issue. I can cover up the topics also. I don't have an issue. I would try to do that. My objective was simply that if we could actually have some of the questions covered up, then this would give you more idea about how to go about things. So, but anyways, I mean, if you people want us to go through the topics rather than papers, I'm okay with that. Now, so now let's just talk about it that if you have invested, if you want to invest in a company, so while investing in that company, there are going to be certain factors that you will consider. Now, what are going to be those factors which you will consider? So the various factors that we will consider are going to be, number one is going to be that financial statement, which would include everything, which would include the balance sheet, which would include the profit and loss account, which would include the cash flow statement. All of these factors, all of these things would be considered. So that's number one. The number two thing is going to be that if I am undertaking a business, so I would want to see the various other factors, which is the legal matters pertaining to that business. If there are any court cases that are going on with the company, so I would want to perform that also. Then I would also want to look at the HR agreements. So there are going to be legal matters. The next thing is that we would want to have a look at the HR, that is the staff going to continue or not, because at times what happens is when you acquire a business, so while acquiring the business, what generally happens is you figure out that the employees of that company are not going to stay here for long. So at times what happens is the acquirer usually does not have much information. It's always when you acquire a company, you have people on board, you try to understand that how do they operate, how do they function, and then you can actually properly take over. The fourth thing is that you are also going to look at the tax matters. You're going to look at the operational matters, like any technical issues or any other operational issues that are associated with that entity. So there are going to be a lot of things which as an entity you would have to consider before putting in an investment. So what happens is generally we hire a firm and we request that audit firm to provide us a detailed information, detailed evaluation about whether the information given to us is correct or not, and at the same time, should we invest into this business? Is it a potential business? What are the challenges? What are the key challenges associated with them? So these are the things that we actually do. Anyways, so this is what the concept of due diligence is. So due diligence, is it an assurance engagement or is it a review engagement, or is it related service engagement? It could be all. Other than audit, it could be all. It could fall under ISAE, it could fall under ISRS, it could fall under ISRE, it could fall under all. Like for example, if you are, as part of your due diligence engagement, if you are auditing the historical finance information, then it's a review engagement. As part of your due diligence engagement, you are talking about multiple aspects, you're looking at multiple things, and that's an ISAE. If you are specifically doing what you are being told for this due diligence, then it could be agreed upon procedure, which is falls under ISRS. So these are the various things. We are going to try to understand the due diligence by going through another question. And that question is actually December 2013. The question is December 2013. Question number 2. Question number 2 of December 2013. If you could just come over to this question. So December 2013, question number 2, it says you are a manager in the business advisory department of Goleen and Company. So you are a manager in the business advisory department of Goleen and Company, and your firm has been approached to provide assurance to Baltimore, a company which is not an audit client of your firm, on potential acquisition, and you have just had a conversation with Mark Clare, etc., etc. The requirement of the question is discuss the 3 benefits to Baltimore of a due diligence review. Obviously, whenever you undertake a due diligence review, you have got multiple advantages of such a review. You get to understand in advance that what is this company going to be, how is this company going to be. You get an understanding of the information submitted by the management, if it is true or not. You get to have an idea about the value that you should put to the company. So you get multiple advantages, and you already know in advance the challenges that will be faced with this company. So this is what the advantages of Baltimore company are, number 1. Number 2 is identify and explain the matters which you would focus on in your due diligence review and recommend the additional information which you would need to perform your work. So that's another important thing. And rightly describe the type of conclusion which would be issued for a due diligence report and compare this to an audit report. So if I could just recall that whenever we talk about the due diligence report, so for the due diligence report, the type of opinion that we actually submit is the negative form of conclusion, which states that
Nothing has come to our attention that causes us to believe that the financial statement does not give a true and fair view. Whereas in the audit report, we say that financial statement give a true and fair view. It's a positive form of conclusion. Now let's move forward and discuss further. So this question says, identify and explain the matters that you would focus in your due diligence review and recommend the additional information which you will need to perform your works. So it's also important to understand the additional information. Let's have a quick go through of the question. Okay, please go through this question and we shall discuss in 5 minutes time. Okay, so now let's start discussing about this question. The question's requirement is you need to identify and explain the matters which you would focus in your due diligence review. The overall background to this question is this question is about Baltimore company, who is actually a book publisher, is specializing in publishing textbook and academic journals. In the last few years, it says market has changed significantly, with majority of the customers purchasing books from online sellers. So they have been the book publishers. The market has changed. Okay, this has led to reduction in profits, and we recognize we need to diversify our product range in order to survive. As a result of this, we decided to offer subscription-based website to customers, which would provide the customer with our full access range of textbooks and journals online. Now, it says on investigating how to set up this website, we found that we lack sufficient knowledge and resources develop and resources to develop it ourselves, and began to look for another company which has the necessary skills with a view to acquiring the company. We have identified Mizzen as potential acquisition. So they've identified the Mizzen company as a potential acquisition. And we have approached the bank for a bank loan which will be used to finance the acquisition as if it goes ahead. Now it says Baltimore has not previously acquired another company. So it says Baltimore has not previously acquired another company, and it says you'd like to engage your firm, etc., etc. Now see, so identify and explain the matters which you would focus in your due diligence review and recommend the additional information which will be needed to perform the work. Now let's just try to understand. It says what's the company background. The company's background is Mizzen was established 4 years ago by 2 university graduates. So it has been formed 4 years ago by 2 university graduates, Vic Sandhu and Lou Lian, who secured funds from a venture capitalist company, BizGrow, to set up a company. So what have they done? They have actually formed the company 4 years ago, and the funds that they obtained was from a venture capitalist company, and venture capitalist company is basically named BizGrow. Now, Vic and Lou started a new type of website interface which has proven extremely popular and which led to the company growing rapidly and building a good reputation. They continue to innovate and have won awards for website design. Vic and Lou have minority shareholding in Mizzen company. Now you see, the client has approached us and he says that I want to acquire this Mizzen company. So now if this client wants to acquire the Mizzen company, item should be. Hein class was silent because I think there was a break and there was actually this reading time given to you people. If I haven't gone through the ethics yet, I'll go through the ethics, don't worry about it. Now, it says Mezen was established. So you see the client is actually willing to take over this company. And when the client is willing to take over this company, then the client is expecting us to identify and explain the matters which we would focus in our due diligence, and we need to recommend them the additional information that is needed. So now you need to think about it as if you are acquiring this company, So if you are acquiring this company, then what are going to be the factors which you will consider before acquiring this company? They are important. So you need to think as if you are yourself acquiring this company. So now how? It was established 4 years ago by 2 university graduates, Vic Sandhu and Lu Lian, who secured funds from VC venture capitalist company to set up this company. It says they created a new type of website which has proven extremely popular and which led to the company growing rapidly and building a good reputation. They continue to innovate and have won awards for website design. Furthermore, it says the Vic and Lou have a minority shareholding in Mezen company. Now, see, let's just understand. Number one thing is I am acquiring this company, and I know that why am I running after this company? Because this company has got this expertise of online presence, and we think that our business has shifted more towards the e-commerce. So we now want to acquire this company, we want to diversify, and we want to acquire this company, etc. So now if I acquire this company, definitely I'm acquiring this company as a going concern. So as a going concern, I need to consider a few factors. Number one, Vic and Lou. Now apparently it seems that they are the founder members. They are in minority because they were short of capital, but they are the technical person in the team are them. So if the Vic and Lou are there, so what exactly is going to happen? We can say that whenever we talk about the Vic and Lou, so we would say, will they continue? Will they continue with the Baltimore company when they acquire? Will they continue with the Baltimore company when they acquire it? Now next, they created a new type of website interface, etc., etc. Now, Mezen company employs 50 people and operates from premises owned by BizGrow, for which a nominal rental of $1,000 is paid annually. Now, number one of them is the 50 people. Remaining tenure of employment. The 50 people, what is the remaining tenure of employment? So that's also important. That what is the remaining tenure of employment for these people? Now what else is there? If we discuss further, so we would say that this is how it is, and the next thing is BizGrow's property. Will it remain? Or second thing, at what cost? Because you see, you are advising them before acquiring the company, so you need to identify the matters which need to be considered. Just think about, you are going to acquire a business, so what are the factors which you will consider as an independent person, that okay, these are the factors which I need to consider. Now, it says the company uses few assets other than computer equipment and fixtures and fittings. The biggest expense is wages and salaries, and due to increased demand for website development, freelance specialists have been used in the last 6 months. So now the point is that the entity is relying upon the freelance specialists. So important point is freelancers, how is their quality? And when we talk about that freelancers, so if the freelancers are working easily in the market, then the problem that would also arise is about the retention of those 50 people. Retention of 50 people would also be a factor. That will you be able to retain those 50 people? Now next, It says according to most recent, Mizzen has a bank balance of $500,000. Apparently, the entity has a bank balance of $500,000, which is apparently a low bank balance. If you look at this financial statement, so you would figure out this thing, that the entity's revenue is growing over a period of time. You could see from 2010, 11, 12, 13, you could see that the revenue of the entity is growing. So it's actually the sales which are growing. So ideally speaking, I've told you earlier also, whenever you come across some financial data, then you need to perform some analytical also. So if I talk, say, from September 2010 till this September 2013, so we would say that the change in sales is going to be how much per year. You could do it this way: 4268 minus 500 divided by 500 gives you X amount, and you need to divide it by, this is going to be first increase, second increase, and the third increase. So it has increased by 3 times. So how much is the average annual growth rate? Can somebody please share what's the average annual growth rate? Okay, so it's actually are you sure? 2.5%. It says that 2.5%. It's not possible. 4268 minus 500 divide by 500, and then you divide it by 3. How much percentage is it? Okay, 7.5 divided by 3 gives you 2.5% as the increase in revenue. Okay, now what next? The next situation is you can actually talk about the operating expenses also, that how the operating expense is increasing. So if you talk about the operating expenses, these operating expenses, what's the change in the operating expense? Okay, so the correct one of them is 251.2. The answer is not 2.5%, it's 251%. So it's a rapidly growing company. The operating expenses have grown by what? It's approximately 1200 gives you 40. Is it 40% or what? Okay, approximate 37%. Now what else? The finance cost has remained same. The profit or loss before tax is actually given, which is increasing. The tax expense is obviously increasing now. So now what is important is, as an independent person, only 40% growth in the operating expenses is there, whereas the revenues are growing by 250%. So as an independent person, I would be concerned about it, that if it's a correct growth rate or not. So it is only 40% and that is 251%. So I would be concerned if this is a correct growth rate or not, because there could actually be a thing that the sales are highly overstated. Now what else? That says the company has 3 revenue streams. Now what are those 3 revenue streams? It says developing and maintaining website for corporate customers. Mizzen charges a one-off fee to its customers for the initial development of the website and for maintaining the website for 2 years. The amount of this fee depends on the size and complexity of the website and averages $10,000 per website. Customers can then choose to pay another one-off fee averaging $2,000 for Mizzen company to provide maintenance for a further 5 years. Now, how is it all about? See, if I talk about the whole of it, what is going to happen? First of all, you need to understand one fact, which is that the revenue recognition policy needs to be considered. Have they bifurcated the receipt into deferred income and into sales? Now, you would ask why. The reason behind that is whenever you develop a website, you give a free maintenance for 2 years. So the $10,000 that they are charging for any web development, of them, the deferred income has to be for the 2 years and it has to be separate out. So the question mark is, have they recognized the deferred income or they have recognized the full $10,000 as the 100% revenue? Another question that would arise is how much is liability? Because you see, and there is another offer which is 5-year free maintenance. So what is the total amount of what is total deferred income? That's important. Because you see, if you don't determine the deferred income, then that's going to be a problem. Furthermore, it says Mizzen has also developed a subscription-based website on which it provides access to technical material for computer specialists. The customers pay an annual fee of $250, which gives them unlimited access to the website. This accounts for approximately 30% of Mizzen's total revenue. Now see, what is very important is whenever you are acquiring a company, so you need to also consider the sustainability of the revenue. You need to also consider the sustainability of the revenue. Now, what exactly do we mean by the sustainability of revenue? So whenever we talk about the sustainability of the revenue, so sustainability of the revenue is actually like if it says Mizzen has developed a subscription-based website on which it provides access to technical material for computer specialists. Now, if it says computers pay an annual fee of $250, which gives them unlimited access to the website, means that if 30% of the revenue is based on this subscription-based website on which the customer subscribe for the data. So now, my point is that how long will you be able to sustain this revenue? For how long will you be able to sustain this revenue? That's actually a question mark. So you need to identify that will they be able to continue it for further periods or not. Next, company has built up several customer databases which are made available for a fee to other company for marketing purposes. This is the smallest revenue stream. Accounting for approximately 20% of Mizzen company's total revenue. Now, if I say smallest revenue stream, so I say this is a smallest revenue stream accounting for approximately 20% of Mizzen company's total revenue. So what exactly do we mean by this? This actually means that then again at 20% based on the fee which you charge from the companies for marketing on your database. So this is then again one of those revenues which is not something which could actually run the company. So the overall 100% revenue, the 50% is a good revenue, but then again on which you don't have the available staff, you are relying on the work of the freelancers who can always take away the work. But now, next, that is one thing. The revenue might be overstated because on some cases the 2-year period has been given, on some cases the 5-year period has been given, so the revenue might be overstated in those cases also. Then the next thing is basically the subscription based website, which is not something of a sustainable. Then again, the marketing services are not sustainable, so the 50% of the revenue is not sustainable. So for how long can you sustain with such a revenue? That's also important. So these are the various factors that you would consider. Now the questions requirement is recommend the additional information which you will need to perform your work. Now I would like you people to understand the questions requirement whenever the examiner says that what additional information would be needed. So whenever the examiner says that what additional information would be needed, so whenever we talk about the additional information that would be needed, so what's important? You need to think like this. You need to think as if you are, what do you need to think? You need to think as if you are performing the audit, and when you are performing the audit, the documents, the information that you would be using to help you or to assist you with your audit would be the information that you would expect that you would be needing, like the additional information. Like, say, I want to give advice to Baltimore if they should acquire this company or not. Okay, so there is certain additional information that I need to know. Like, for example, I need to know the cash flow of this company. I need to know the cash flow for this company. The first thing is I need to know the cash flow for this company, number one. Number two is so I need to know the cash flow for this company. That's number one. And the second thing is that if I need to know about the cash flow of this company, so what else is there? The next situation is I might also be needing the breakup of shareholding. I might also be needing the detailed breakup of revenue. I would be needing the staff contracts. So you see, in order to complete the work that you have been required to perform, which is that you need to give an advice, identify, because the due diligence is you need to advise if they should go ahead with acquiring this company or not. So that's what you need to do. You need to actually think about it as if you're performing analysis, performing a detailed review, and you need to understand that what is going to be the additional information which you would be needing. You would be going through the cash flow of the business, you would be going through the arrangements, or you would be maybe going through the website agreement that's normally entered into. You would be recalculating the overall the deferred income that is to be recognized. So you might need the details of unfulfilled contracts up till now. So there are going to be certain things which you would be needing as an independent personnel. Cash flow statement, yes. Segment reporting, yes. Yes, Saklan, we should be focusing on a lot of things. Yes, Hassan, you should explain why. Anas, it should be, it can be bullets. Hafiz Ahmed, you need to verify the legal case also. Okay, so that is actually about the due diligence which we have discussed. So I hope that you don't have any specific queries or with respect to this due diligence. Okay, I hope that this is clear now. If this is clear, then we can actually move forward and we can discuss further. Yes, you can do it, but otherwise keep it simple. Keep it simple, just like short paras. Patience Ekan Kawasa, I'm sorry if I have pronounced your name incorrectly. See, if the firm has been negligent, then it could be held liable, but then again, that would depend upon that what has been the overall engagement letter, what does the engagement letter mentions. So if the engagement letter would actually make a lot of things would be decided on the basis of engagement letter. Yes, Hafiz Ahmed, it's a nominal amount, but we need to discuss that what is BizGrow gonna do after it? Will they still continue to charge? Will they allow us to use the premises, or what are they gonna do? Salman, I have gone through 2 questions on this KPI and CSR, so I think I very much gave an idea that how to deal them. No, Saklan, no. Okay, Poonam, yes, I will go through forensic audit. It could be document name, it could be other information like other details, other things. Okay, there is this question which is you are the manager, the same paper, December 13, question number 5. So December 13, question number 5, we need to have some discussion on this. Could you please go through part A of this question so we can actually discuss? Mariam, not today. I can share it later on the WhatsApp group. Okay, take your time for 5 minutes reading for this part, this question. Okay. Shazab, somebody here would share the link on the WhatsApp group. You people can join those group. Somebody please could share the link. Now it says you are a manager responsible for the audit of Burford Company. I will have a quick discussion about the matters which cast doubt on going concern status of Burford. And it says explain the audit evidence you should expect to find in the review of the cash flow forecast. Now it says you are a manager in the responsible for the audit of Burford Company which designs and manufactures engine parts, etc. The year end is July 2013 and the company and is nearing completion and you're reviewing the working papers of going concern section. Financial statements recognize a loss of 500,000. Last year it's a profit of 760,000. That's one of the factors that the entity has run into losses. So that is one of the factors that the entity has run into losses. And the next is total assets are so and so. Audit senior has left a note for your attention. I performed analytical review. The current ratio is 0.8. It was 1.2 last year. That means the current ratio has gone down. The quick ratio is 0.5. It was 1.6 last year. The quick ratio has deteriorated very badly. It says the latest management account shows that ratios have deteriorated further since the year end. It shows that the latest management accountant shows that the ratios have deteriorated further since the year end and the company now has a cash balance of only 25,000. Now subsequent to year end, the current and the quick ratios have further worsened. Burford has long-term loan outstanding of 800,000 with covenant attached, which states if current ratio falls below 0.75, loan can be immediately recalled by the lender. So you only have 25,000 available. The loan is of 80,000. It could be recalled by the lender immediately. The current ratio was 0.8 and it's almost there to be falling down below this 0.75. It also says that one of the Burford company's best-selling products has become technically obsolete. The best-selling become as technically obsolete. Historically, Quickfire has recognized generated 45% as the company's revenue in response to customers' preferences. 1.3 has been spent on designing a new product, the Greenfire, due to launch on so and so. The cash flow forecast as so and so, so and so. So basically, the matters which cast doubt on the going concern status of the Burford company, we've gone through them. Now, let's just have a quick discussion about the audit evidence that you would expect to find in your file review in respect of the cash flow forecast. Let's just talk about it. If I say, it says the cash flow forecast has been prepared for the year to 31st July 2014, indicating that based on certain assumptions, the company's cash balance is predicted to be 220,000. Now, what are those? They are successful launch of Greenfire product, sale of plant and machinery used to manufacture Quickfire, generating cash proceeds of so and so, reduction in payroll costs of 15%, and the receipt of grant of 30,000 from government department which encourages innovation in environmentally friendly products scheduled to be received in February 2014. Now, let's just try to understand one by one what exactly are going to be these things. Now, so then again you need to actually perform the procedures, or you need to write down the evidence that you would expect with respect to them. See, one of them is basically a successful launch of Greenfire product. So you may actually say that Greenfire product cash flow forecast. Greenfire product cash flow forecast, that's one thing. Number two, sale of plant and machinery which was used to manufacture Quickfire. So you could actually have the management's written representation about likelihood of Greenfire launch. The further thing that it says is basically the machinery would be sold for 50,000. So if the machinery would be sold for 50,000, then the correspondences with machinery buyer It says reduction in payroll cost 15% caused by redundancies in quick fire manufacturing plants. So we would expect to find the payroll details also, that what are the payroll details. And furthermore, we would also expect to find that if the payroll details are there, then what else? There could actually be the things like the you need to verify if the increase in cost because of, if the increase in the cost because of green fire is considered. Furthermore, it says the receipt of grant of 30,000 from a government department which encourages innovation in environmentally friendly products scheduled to be received in Feb. So you might actually say that the grant, basically the grant document is important, that the grant document has to be there, which should show that the government has got such policy of committing such amount. So these are the various things that we would expect to find generally. Lastly, it says having completed file review, you have concluded the use of going concern assumption is appropriate, but there is a significant doubt over Burford's ability to continue as a going concern. You advise the company's audit committee that a note is required in financial to describe the significant doubt over going concern. Audit committee is reluctant to include a detailed note to financial statement due to fears that note will highlight the company's problem and cause further financial difficulties, but have agreed that a brief note will be included. So if you could remember, if you could recall, when we were discussing the audit report, we did discuss about this thing, that there is at times material uncertainty to the entity's ability to continue as a going concern. So whenever there is a material uncertainty to the entity's ability to continue as a going concern, then you need to see if the disclosure is being given or not. If an appropriate disclosure is given, then a material uncertainty section is given in the report. If no disclosure is given, then adverse opinion is provided. If a disclosure is given but that is inadequate, inappropriate, then qualified opinion is being provided. So that's how the audit report is related to the going concern section of the report. Let's copy of bank statement also, but the grant has not been received yet. It will be received. Let's have a break. It's a namaz break till 7:45 p.m. So before the break, we had a discussion about a question on a going concern, and we also had a discussion about due diligence also. What we are now going to do is that we are now going to move forward, and we are going to discuss about section A, section B, and section C of the syllabus, which actually covers up the quality, ethical, professional, legal, all these matters. So we are going to have a discussion about them. Now let's start discussing. First of all, you people have December 2013 exam paper with you. I think because we have gone through a lot of questions from this December 2013 exam question. So what exactly, let's come on to this question number 4 of the December 2013 exam question. The question number 4 of December 2013 exam question. If I talk about this question number 4 of December 2013 exam question, so the question's requirement is, number 1 of them is, the question's requirement is identify and discuss the ethical and other professional issues raised and any recommendations that should be taken in respect of the Tedbury Company, Stratbury Company, and a Stratford Company. So if I say identify and discuss the ethical and other professional issues raised and recommend any actions that should be taken in respect of Tedbury Company, Stratford Company, and Banbury Company. So if I talk about it, number 1 thing is that whenever we talk about the identification and discussion of the ethical and the other professional issues, so what you need to keep in mind is generally whenever we attempt such scenarios, we need to keep the code of ethics in mind. The code of ethics generally talks about the fundamental ethical principles. And what are those fundamental ethical principles? Those fundamental ethical principles actually include the principles of integrity, the objectivity, the professional competence, and due care, confidentiality, and lastly, professional behavior. So if we talk about this fundamental ethical principles, so you're going to understand this thing that whenever we talk about the fundamental ethical principle, the number 1 thing is that there are 5 fundamental ethical principles, which are integrity, the objectivity, the professional competence and due care, confidentiality, and the professional behavior. Now, what exactly are these principles? So, number 1 of them is integrity, which means the accountant or the auditor has to be honest and straightforward. They have to be honest and straightforward. That's one thing. The second thing is actually about the objectivity. And what do we mean by the objectivity? Objectivity majorly refers to the independence of the auditor. So the objectivity majorly refers to the independence of the auditor. The professional competences, the auditor is expected to be competent in whatever work that he is performing, and he should be exercising due care while undertaking his actions, while undertaking the activities that he is performing. So number 1 of them is integrity, number 2 is objectivity, the third one of them is the professional competence and the due care, and the fourth one of them is confidentiality, which means that the auditor has to maintain the confidentiality. Whose confidentiality do they need to maintain? They need to maintain the confidentiality of their existing clients, their potential clients, their previous clients. They need to maintain their confidentiality. And lastly, which is professional behavior. We have had a few examples today about this professional behaviors with respect to the Pakistani politics, where our finance minister, being a chartered accountant, has also been disqualified on account of few forgeries of documents and all that. So when we talk about these professional behavior, so the professional behavior is that your actions should not bring should not bring the profession into disrepute. Your actions should not bring the profession into disrepute. That's what we need to talk about. Now, let's move forward. If I talk further, so let's talk about it. So these are the fundamental ethical principles, which are the objectivity, integrity, professional competence, the confidentiality, and professional behavior. That's one thing. In addition to this, there are various ethical threats that arise. So if the examiner is asking you identify and discuss the ethical and the professional issues, so we need to discuss the ethical threats also. Now, the various ethical threats that arise include self-review threat, which is reviewing your own work. The next one of them is the self-interest threat, which is having some financial interest or any other personal interest. That's a self-interest threat. Number 3 thing is the intimidation threat, which is auditor having either the financial intimidation or the auditor having either the financial intimidation or maybe the auditor is having this physical intimidation. So the auditor could actually face various types of intimidation. Then another ethical threat is about the familiarity threat. So the another ethical threat that arises is the familiarity threat. And the fifth one of them is basically, so we talk about this familiarity threat, and the fifth one of them is advocacy threat. So what is this familiarity threat? Familiarity threat is basically when you and the client actually know each other for a long period of time, or if you have got any relationship which would actually affect your independence, so that's also give rise to the familiarity threat. And the advocacy threat is about promoting or protecting a client. So it's about promoting or it's about protecting a client. So whenever we talk about the advocacy threat, it's about promoting and protecting a client. That's what is considered to be advocacy threat. Now, so whenever the questions requirement says that identify and discuss the ethical issues, so for the ethical and the professional issues, you need to consider that what are the ethical principles? Is there any violation of any ethical principle, or are there any ethical threats? Is there a violation of any specific ethical threat? So that's what you need to consider. In addition to this, there are few other ethical threats that also arise, and those include the management role. At times the auditor plays the management role. That's also one of those things that arises. And in addition to this, at times there is this conflict of interest. So these are the various things that actually arise. So whenever you come across such a scenario, you need to identify this. So my suggestion to you would be that prepare a checklist. And when you prepare a checklist, you need to have such a checklist like which say integrity, objectivity, professional competence and due care, Integrity, objectivity, professional competence and due care, confidentiality, and the professional behavior. So like in this part, you have got A, B, and C. So this is A, B, and C. That's how you should do. And additionally, what you should do is you should have the ethical threats. And what are those ethical threats? They include the self-interest, they include the self-review, they include advocacy, they include the familiarity, and they include this intimidation, and then the management role, and then conflict of interest. So you can have then again A, B, and C. That's what you can do. And once you have done that, so you will have an idea about how things are going to operate. Now, let's come on to this question, which is December 2013, question number 4, about Chester and Company, where the question's requirement is identify and discuss the ethical and the other professional issues raised and recommend the actions that should be taken in respect of it. So I would want you to take 3-4 minutes and go through this question, and then we shall start discussing. Okay, if we start discussing this question, it says you are an audit manager in Chester and Company, and you are reviewing 3 situations which have recently arising with respect to potential and existing audit clients of your firm. Now, it says Tedbury Company's managing director Johan Stanton has approached Chester and Company to invite the firm to tender for its audit. Tedbury Company is a small owner-managed company providing financial services such as arranging mortgages and advising on pension plans. The company's previous auditors recently resigned, and Johan Stanton states that this was due to a disagreement on the accounting treatment of commission earned. And because they thought our controls were not very good, you are aware that Tedbury has been investigated by the Financial Services Authority for alleged non-compliance with its regulation. As well as performing the audit, Johan would like Chester & Co. to give business development advice. Now, one thing. The questions requirement has got multiple elements. So as I suggested, that you need to actually understand that what exactly are the ethical and the professional issues that could arise in this case. Now, number one of them, it says Johan Stanton has approached Chester to tender for the audit. Tedbury is a small owner-managed company providing financial services such as arranging mortgages and advising on pension plans. See, arrangement of mortgages and advising on pension plans is something that is a specialized area. So while actually undertaking this specific audit, we need to consider several things, and amongst those things, one of the factor is that do we have the professional competence and the due care? Do we have the competence to undertake or handle this specific scenario? If we have the competence to undertake or handle this scenario, so that means that is going to be the case that we need to consider. So the ethical issue that we need to consider. Number 2, company's previous auditors resigned. Johan states this was due to disagreement of the accounting treatment. So when there was a disagreement, so that means there could be an integrity on the part of the client, that the client's integrity might not be up to the mark, that might be in doubt. Then if I talk further, it says, and because they thought our controls were not very good. You are aware that Tedbury has been investigated by the Financial Services Authority. Now, when it says Tedbury has been investigated by the Financial Services Authority, that is something, another issue with respect to it. Now see, the reason behind that is this is one of the professional issues. Now, why is it a professional issue? You need to understand this, that the professional issue arises because they have been investigated. So when they've been investigated, there is a problem. Because you see, nobody would like, none of the lawyer wants to be on the losing side. Like the lawyers who were defending the whole Sharif family, and the lawyers who were defending this Sardar and all. So it's now like associated with them actually might cause some of the issues with them. Furthermore, it says as well as planning and performing the audit, Chester would like to give business development advice. So then again, if they're asking us to give the business development advice, that is another issue with the professional competence and the due care. So that's another one of those things. So now if I actually see this whole, so if I see this whole, then what is going to happen? What is going to happen is that the overall scenario give rise to an issue that the integrity of the client is in doubt, and we need to be clear before we go ahead with this specific audit, that is this client worth doing, because then it's an owner managed, that means weak internal control, lack of corporate governance, and then there has been that disagreement between the last auditor and them. So that is all an issue that has arisen over here, number 1. Number 2 is about the professional competence and the due care. Now, what's the professional competence and due care? When we talk about the professional competence and the due care, the professional competence and due care issue over here is number 1, it's involved in arranging mortgages and etc. So mortgages, pension plans, these are all technical elements, and which not every single person can do. So it's also important that you should know that this is what it is. And the next thing is the professional competence and the due care is there. The next area is actually about the business development advice. That is not something that we can do as an auditor. So when we talk about the business development advice, that is we can't do as an auditor, that's also an issue. Lastly, would we be associated? Would we like to be associated with them? So generally speaking, if the client thinks that it is not such a, if you think as an auditor that it's not such a big deal, then you can continue doing audit of this client. But if you think that there is an issue, there is a problem, then you should rather not go ahead with this specific audit of this company called Tedbury. Now what next? It says the audit of Stratford Company's financial statement for year ended 30th November 2013 will commence shortly. You are aware that company is in financial difficulties. Stratford Company's managing director, Colin Charles-Lecourt, has requested that audit engagement partner accompanies him to a meeting with the bank where a new loan will be discussed. And the draft financial statements reviewed, Colin has hinted that if the partner does not accompany him to the meeting, he will put the audit out to tender. In addition, an invoice relating to interim audit which work performed in August has not yet been paid. Now, there are several issues. Number one of them is basically that you do know that the client is in financial difficulties. Now, when the client is in financial difficulties, what does that indicate? That if the client is in financial difficulties, this actually indicates that whenever we say that the client is in financial difficulties, that means as an auditor, your fee is at risk. Now, if as an auditor, your fee is at risk, that means that the fee would be at risk, means the quality of the audit would go down. So professionally, you should consider if you should go ahead with this audit or not, number one. Number two is that the director has requested you to accompany him to a meeting of a bank loan. So now here another problem that is arising here is one of them is there is a self-interest threat. The second one of them is there is a threat of management role. Now why is there a threat of management role? Because if you're going to accompany him to this if you're going to accompany him to the bank where the loan is being negotiated, as long as you're going there to explain the financial statement, that's okay. But if you're going there to actually negotiate the loan, that means it's a management role which you are playing, so that's another threat that will arise. Then the management has told you that in case if you don't accompany, then they will put the audit out to tender, which is then again an intimidation which they have given to you, that's a financial intimidation. And lastly, the interim work has been performed, but the fee has not been cleared. That's another self-interest threat that arises. No, business development advice won't be a self-review threat. Somebody please could you share the link to the WhatsApp group so that people could join? Madam, we'll have one or two of the quality, the questions on quality. Now what next? It says Banbury Company is a listed entity. It's a listed entity, and its audit committee has asked Chester & Co. to perform an actuarial valuation on the company's defined benefit pension plan. One of the audit partners is a qualified actuary and has necessary skills and expertise to perform the service. Banbury had year ending of 28th Feb 2014 and the audit planning is due to commence next week. Its financial statements for the year ended 28th Feb 2013 in respect of which the audit report was not modified included total assets of 35 million and a pension liability of 105,000. Now see, if I say this this 35,000 divided by 105,000 divided by 35 million. So how much is it? Point 3%. Okay, Naved, I'll come back to it. Don't worry about it. So 105,000 divided by 35 million gives you 0.3%. Now, what does the Code of Ethics state? The Code of Ethics state that whenever it comes to a listed company, you see, generally speaking, this pension liability, if you are an auditor who has got a qualified actuary, that means you have the expertise, you have the competence to perform this task. But now, having the competence to perform this task, does that mean that we should perform this task? The answer is no. So then what do we need to do? We need to take a decision. And what sort of decision is that going to be? We need to take a decision that are we eligible? Can we perform this task? The answer is you cannot perform this task because it gives rise to a self-review threat. The pension liability is being reflected in the financial statements. So basically what happens is, if the pension liability is reflected in the financial statements, I'm repeating it again, if the pension liability is reflected in financial statements, then what happens is, it's a self-review threat, but since it's very low, 0.3%, therefore the threat's significance is not that high. But then again, can we do it? The answer is no. Because whenever it comes to a listed company, you cannot give any services related to the financial statements. That the financial statements related services cannot be given even if it is insignificant. So that the ethical issue, the ethical dilemma over here is that the auditor should not, the safeguard should be that the auditor should not accept the engagement and he should refuse to the client. Okay, Zafar Iqbal, yes, that is also advocacy, and advocacy, in addition to advocacy, that's also playing a management role. Why is that a management role? Because when it comes to this bank loan negotiation and etc., it's not something that the auditor is to do. It is something that the management should do. It's not the auditor's responsibility. Okay, so now let's move forward and discuss further. We are now going to move on to the next question, which is question number 4 of June 2015. So let's come on to this question number 4 of June 2015. Question number 4 of June 2015. Here the question's requirement is comment on the quality control, ethical and other professional issues. Okay, this is Bank and Co. So let's just go through this question and we shall discuss them. Okay, Fry, I will. Ishfaq, yes, I do know. Just wait for a second. Just wait for a while. You'll get an understanding. Okay, so now let's talk about this. Rarvin, I would try to actually explain it through the question. Okay, offshoring I will explain, just wait. Okay, now, one thing is, if you look at the requirement of this, question, you'll figure out that it says comment on the quality control, ethical, and the professional issues raised in respect of audit of wire company. So quality control, ethical and professional issues raised in respect of the audit of wire company and the firm-wide policies of Bunk and Co. and recommend any actions to be taken by the audit firm. Now what do I need to actually discuss with you people is, a lot of students actually try to make things complicated for themselves by specifically trying to distinguish between the quality control, ethical and the professional issues. Now, from the exam perspective, my suggestion to you people would be that don't try to distinguish. You can't distinguish at times, because what happens is you run out of points on the quality, at times you run out of points on the professional, so don't distinguish. Now, first of all, what exactly are these issues? What is quality issue? What is ethical? What is professional? Now, I would not go into large details of either 220 or ISQC1. I would try to keep it very, very simple, and I would try to actually help you understand that how can you actually remember, or how can you get tricks of these things. See, we know how to perform the audit. We know that whenever the audit is performed, the materiality is set, the risk assessment is performed, the entity's understanding is obtained, a professional clearance is obtained, materiality is reassessed, the audit samples are being drawn, etc., etc., etc. So we do know how the overall audit progresses, how the overall audit works. Now, if we do know that how the overall audit works, then what is important? As far as the quality of the audit is concerned, you need to see if the ISAs have been complied with or not. If the ISAs have been complied with or not, that's what you need to see. So that's important. Like, for example, if the audit has been performed and the samples have not been drawn using the correct technique, that means there is a quality lag. The firm's personnel are not trained, that means that's a quality related issue. So you just need to actually remember that how the audit should have been performed, and is it being performed in a proper manner? If it's not, then it's a quality issue. Now let's just talk about it. Okay, Rarvin, you see the marks are usually not split between you see the marking scheme, the quality, ethical and the professional, they don't split it this way. It's just that the issues which are identified in the scenario, you just write down, you just identify the issues and you'll get marks for them. Like, see, you're a senior manager in the Bunk and Co., a global audit firm with offices in more than 30 countries. You are responsible for monitoring audit quality and ethical situations which arise in relation to audit clients. Now, Wire and Co. is an audit client whose operations involve haulage and distribution. The audit report for the financial statements of Wire for the year ended 31st December 2014 was issued last week. You are conducting a review of the quality of that audit and any ethical issues, etc. Now, Wire Company's audit committee refused to agree to an increase in the audit fee despite the company's operation expanding into new locations. In response to this, materiality level was increased during the audit and some review procedures were not carried out. To reduce sample sizes used in tests, the samples were selected based on judgment rather than statistical methods. In addition, only parts of the population being tested were sampled. For example, certain locations were not included in sample of non-current assets selected for physical verification. Now, you see, the problem here is the number one matter that arises is the entity's size has increased. Now, if the size has increased but the fee did not increase, so what would happen is the quality of work will go down. The quality of work will go down. Why? Because as an auditor, you would try to do what this audit firm has done, which is that it will reduce the amount of work that it performs. It would try to just get rid of audit as soon as possible, as early as possible, in the shortest possible time with the minimum amount of effort. So this is all going to be an issue that will arise when you will be performing this audit. Why? Because you do know that you will not get the required or the desired return for your services. Then why should you invest? Why should you actually put in such a huge effort into it? So what is going to happen is the size of the firm has increased, the client has increased, but the fee hasn't increased. So the quality of the work will go down. That's number one. Number two is basically what they did was they reduced the materiality level was increased during the audit. So you see, materiality level increase, review procedures is skipped. Then at the same time, the review procedures is skipped. Furthermore, the statistical methods were also not used. So if you see all these things, you would understand that there is actually severe lack of compliance with ACCA. You're not actually setting materiality based on risk. You're setting materiality based on the amount of work that you intend to do. That's the problem. Now the second thing is the review procedures have been skipped. Why would you review? Why would you skip the review procedure? Why would you reduce the audit from being a thorough audit? So these are all important things that need to be considered, that need to be seen, that need to be seen in all that. So you need to actually talk about it, that the audit firm should not actually do these things. If they have to perform the audit, they should perform it in a proper manner. If they think that they can't perform the audit in a proper manner, then what they should do is that they should rather not go ahead with this audit, and they should actually consider resigning from the audit. That's what they have to do as an audit firm. No, Sania, why would you? I mean, you could just refer to it that the detection risk would become high, you will fail to detect misstatements. That's all you just talk about it. Now what next? It says some of the audit work was performed by an overseas office of Bank and Company in an offshoring arrangement. Now what's offshoring? There's something called outsourcing and there's something called offshoring. Now what's offshoring? Offshoring is when you set up your office in a distant location where you find a cheaper labor. Like for example, a company might set up its own call center. It's not outsourcing. It might set up its own call center in India, because at times a lot of European companies prefer to set up their call center in India or in Pakistan, because these countries usually they provide cheap services, cheap in terms of the money, not in terms of the quality. So that's how it goes. So offshoring is basically having your own no, the threats need to be named. Yeah, if you have identified a threat, they need to be named. If there is a fundamental ethical principle, that's also the fundamental ethical principle that also needs to be mentioned. Now, what else? So it says the practice is encouraged by bank whose managing partners see it as a way of improving audit efficiency. Like I happen to have a discussion with a few people in Oman, and he was working with PwC Oman, and he told me that what they do is that they don't even adjust, they don't even perform the additions to the adjustments to the financial statements or anything. Whatever the partner does or whatever the manager does, they simply mark it, they simply scan it, and they simply send it across to the office in India, which looks after it, because there they have a cheaper labor, so they could actually do things easily. So that's what this entity is also trying to do, having more people who actually cost uh, not much, and they can get the tedious tasks done in a quick manner. So now it says the overseas office performs the work at a lower cost and is largely low-risk, non-judgmental work included in this arrangement for the audit of wire company, for example, numerical checks on documentation. In addition, the overseas office read minutes of board meetings to identify issues relevant to the audit. Now that's very important here. Now see, first of all, offshoring is allowed. Offshoring is not an issue. I mean, the code of ethics does not prohibit an entity from offshoring. An entity can do offshoring. They can actually have a offshore office and they can operate from there. That's okay. Even delegating the tasks which are not that significant to an offshore company is also okay. But what is important is that you can't actually delegate the tasks which are highly significant, highly important to that offshore office. Why? The reason behind that is, if you delegate the tasks which are highly significant, highly important to that offshore office, with just like reading the board minutes, then the quality of the audit is going to be compromised. So here it's okay for bank and company to have entered into an offshoring arrangement, but it's not okay for them to enter into this this whole thing, which is like getting them read the board minutes, because board minutes are at times you need to read between the lines, you need to read between the various things that are usually not clearly evident, but you need to judge from them. So the board minutes are an important thing which an offshoring arrangement cannot actually handle in a proper manner. Next, 2014, Russell Bell, Wire Company's former finance director, joined Bunk & Company as audit partner, working in the same office as Lester Freeman. Although Russell was not a member of audit team, he did update Lester on some business developments which had taken place at the company during the period before he left. Russell held a number of equity shares in Wire Company, which he sold in January 2015. Since joining Bunk & Co., Russell has been developing initiatives to increase firm's income. One initiative is the audit team members should be encouraged to cross-sell non-audit services, and references to targets for the cross-selling of non-audit services is now included in partner and employee documentation, appraisal documentation. Now, first of all, you need to understand that Wire Company's former finance director has joined Bunk & Company, working in the same office as Lester Freeman. Lester Freeman is the partner who's in charge of this audit. Russell was not a member of the audit team. He did update Lester on some business development which had taken place at the company during the period before he left. So now here, it's actually Russell Bell is actually, there is a breach of confidentiality on behalf of Russell Bell. Why is he sharing the information that he knew while he was actually part and parcel of the entity? He is not allowed to do that. That's a confidentiality which is breaching. And the confidentiality can only be breached in certain circumstances, like, for example, whenever there is a public interest involved, or where it is required by the laws and regulation. Otherwise they cannot do it. So if Russell Bell is actually sharing the information with Lester Freeman, that means he is violating the confidentiality fundamental ethical principle, number one. Number two is basically Russell held a number of equity shares in Wire Company. It says the Russell held a number of equity shares in Wire company. Now, when he says Russell held a number of equity shares in Wire company, that means Russell has taken advantage of the insider information that he had, which is then again means that his integrity is in doubt. He should he should have sold the shares immediately, and he should inform the entity about the gains that he have obtained because of the knowledge, and he might even have to surrender the gains. Now it says since joining Bunk & Co, Russell has been developing initiative to increase firm's income. Okay. One initiative is that audit team members should be encouraged to cross-sell non-audit services. Now, he's saying the audit team members should be encouraged to cross-sell non-audit services. Now, when they say non-audit services, like if the team is going for audit, so they're asking them, okay, see, Naveedur Rahman, the confidentiality is like even if you are working for a company and say that there are few matters pertaining to company, you as a professional are not allowed to discuss those matters with the outsiders. Even though you are employee, even though you're not auditor, but then again you're not allowed to do that because you obtained the information of the company while at work. Thanks. Okay. So here you are asking them to cross-sell the non-audit services. Now if they're going to cross-sell the non-audit services, now let's just try to understand that what problem will it bring if they will cross-sell the non-audit services. Cross-selling the non-audit services is basically the problem that it would lead to is that the firm's staff would now be focusing more on selling non-audit service. That means their focus is shifting from audit towards selling. So if their focus is shifting from audit towards selling, that means the quality of the audit is going to go down, and that's a problem. Especially when it is included as part of their employee appraisal documentation. So that is something that the firm should not have done because it indicates that the firm's quality is going to go down. It's going to have a professional issue that the people will not be able to focus on what they are there to do. They would rather focus upon selling more and more non-audit services. Yes, the self-interest threat will also arise. Okay, so I think you have an idea of this question. Now let's move on to one more question related to the similar type of area, and that is question number 2 of June 2016, question number 2. Yes, Hassan Javed, it is only issue because it is considered linked to the appraisal. So they would actually be focusing on this, and this would reduce their focus on the audit. No, that's not management assistance. Buddy, I've been replying to you. Okay, please come on to the next question, which is June 2016, question number 2. So this question number 2, which is about Macau and Co. Let's come on to this question number 2, part A. You take 3-4 minutes and then we shall discuss. Okay, if we talk about this question, the requirement of the question is again comment on the quality of the audit performed, discussing the quality control, ethical, and the other professional issues raised. Now, if I talk about it, it says no, practice management is different, management role is different. Okay, wait for a while. Can somebody please share the WhatsApp link here? Akshay Salim, I already went through the business risk on the first day. You can listen to them on the recording. Okay, the question says that you are a senior manager in Macan company, etc., etc. Now, Stanley company is a frozen food processor selling its products to wholesalers and supermarkets. From your review of the audit working papers, you have noted that the level of materiality was determined to be 1.5 million at the planning stage, and this materiality threshold has been used throughout the audit. Now, number one, whenever we talk about the materiality, so it is not just about setting the materiality at the initial stage of the audit. It's not about setting out the materiality at the initial stage of the audit, but instead, what we need to do is that we need to reassess the materiality as the audit progresses. So as the audit progresses, you need to reassess the materiality. It says there is no evidence on the audit file that this threshold has been reviewed during the course of the audit. From your review of audit planning, you know that a new packaging machine with a cost of 1.6 was acquired by Stanley in March 2015 and is recognized in the draft financial position at an amount of 1.4 at 31st December. The packing machine is located at the premises of Aberdeen Company, a distribution company which is used to pack and distribute a significant proportion of a Stanley Company's product. The machine has not been physically verified by a member of the audit team. Audit working papers conclude we have obtained the purchase invoice and order in relation to machine, and therefore can conclude that the asset is appropriately valued and that it exists. In addition, Managing Director of Aberdeen Company has confirmed in writing that machine is located at the premises in working order. No further work is needed in respect of this item. Now see, as an auditor, your job is to perform the audit procedures to gather sufficient and appropriate audit evidence. So I repeat it again, as an auditor, your job is to perform the audit procedures so that you are able to gather sufficient and appropriate audit evidence. Now, when we talk about ability to obtain sufficient and appropriate audit evidence, now what exactly do we mean by that? First of all, the sufficiency actually refers to the quantity of the evidence. The appropriateness actually means the relevance of the audit evidence. So when you talk about the appropriateness, that actually refers to the relevance of the audit evidence. Now what else is there? As an auditor, when we talk about sufficiency of the evidence, that is about quantity, and when we talk about the appropriateness of the audit evidence, the appropriateness of the audit evidence actually refers to such an evidence to be relevant and reliable. Now here in this case, if we talk about it, the machine with a cost of 1.6 had a carrying amount of 1.4. Now if it has a carrying amount of 1.4, divided by the total assets. If we see that the total assets have not been given, but what it does is the materiality level was $1.5 million. So the cost was material, but the carrying amount is less than the materiality. But then again, the problem is that the materiality has not been reassessed. So here, if we see, the closing balance indicates that this property was an immaterial item. But then again, we have issues with materiality also. So now, what do we need to do? The auditor should have performed the relevant procedures. He should have got the relevant evidence, which is he should have physically inspected. He should have physically inspected the machine, number one. The second thing is that writing to Aberdeen and Co. and Aberdeen and Co.'s chief executive is actually responding to you. Now what does that mean? The managing director of Aberdeen and Co. is actually confirming to you that the machine is there. Now see, understand that Aberdeen and Company would actually be a very small company, either that a managing director is responding to you, or it would be such a matter that the managing director thought that he should not inform others also. So you need to understand that over here, the audit procedures that have been performed are not even trying to satisfy the relevant assertions. And that's a problem. They should have been trying to satisfy the relevant assertion. That's the most important thing. Now the next thing. Okay, now what next? The next thing is that so these were actually the issues here. Now it says that we've obtained the purchase invoice. So obtaining the purchase invoice confirms the cost. It does not confirm the physical existence. Furthermore, you should have actually inspected the agreement between the company and the Aberdeen and Company, that what sort of agreement is it. It's not that why have we put the machinery at their premises. There has to be a reason. Next. Inventory is recognized at $2 million, so it's a material item with respect to the materiality that is set by the management. You have reviewed the results of audit procedures performed at inventory count, where the test counts performed by audit team indicated count of some items performed by company staff were not correct. Now, you see, we as an auditor, our responsibility is not to perform the audit count, it's the inventory count. The inventory count shall be performed by the teams, the client's personnel themselves. So if the client personnel have to perform, then what actually happens is, you need to understand one thing is that there is no room for error. There is no room for error. Any error would mean that the inventory is misstated. So if we figure out that the materiality, that the company, the staff audit count was not correct, working papers state inventory count was not well organized, and concluded, however, the discrepancies were immaterial, so no further action is required. Now that's a problematic situation. Why? Because the thing is that as an auditor, you check it on a test basis. You don't actually attend every single piece that's being counted. So if you figure out that there are problems, then that means it's an issue which needs to be investigated further. You need to get into it further. It's not like that you find out that they are immaterial. No, misstatement with respect to counting of inventory is very important. Well, yes. The test count has been performed. That's a good audit practice. But the point is, Rarveen, you also need to identify that there are problems with respect to audit. I agree with you that we don't have to be critical only. We have to talk about the good things that the management has done, the audit firm has done, which is that they have performed the test counts. But then again, the problem is that if these were the issues, then they should not have been ignored. It's a sort of a sampling risk. It's a sort of a non-sampling risk that's arising. It says, the audit senior spoke to you yesterday voicing some concerns about performance. The summary of his comments is shown below. Audit manager and audit engagement partner came to review the audit working papers on the same day towards completion of the audit fieldwork. Now, that's where the problem lies. That means the audit manager and the engagement, that's whenever the audit is performed in such a rush and such a hurry, so that is a problem, because you can't perform the audit in such a rush, such a hurry. You can't do it. So here what they are doing is they're performing the audit in such a rush and such a hurry that that's a problem. They should actually ensure that appropriate time is being taken by the manager. The manager reviews after he has reviewed. The corrections should have been done, and then the audit engagement partner is going to come in. It just can't happen that you have the manager and the engagement partner doing it on the same day. Next. The audit partner asked me if there had been any issues on the sections of the audit which I had worked on, and when I said there had been no problems, he signed off the working papers after a quick look through them. Now here, the overall quality control issues in the firm. The partner hasn't even bothered to review the work. Already asked for, are there any issues? If there are no issues, okay, go ahead with it. Now that's a problem. That is a problem. Now it says, when reading the company's board's minutes, I found several references to audit engagement partner Joe Lantau. It appears that Joe recommended the company use the services of his brother Mick Lantau for advice and business development, as Mick is a management consultant. Based on that recommendation, Mick has provided consultancy services to Stanley. I mentioned this to Joe and he told me not to record it in the audit working paper to discuss it with anyone. That means there is actually the audit partner Joe Lantau is not ethical. His integrity is in doubt. Okay, see now, when reading the company's board minutes, I found several references to the audit engagement partner Joe Lantau. It appears that Joe recommended. Now see over here. First of all, Joe, his integrity is in doubt. Why? The reason behind that is, that means he's guilty. He has done something wrong. That's why he has asked that don't record it in the audit. That's a problem. That's number one. Number two. Secondly, there is this self-interest threat because his brother is over there. So automatically that the Joe Lantau is not independent with respect to this audit. So that's also a problem. So there are these problems with respect to it. So when I've mentioned it again that you don't have to segregate between the ethical, legal, quality control, professional issues. You just have to talk in general. We shall be ending in a while. Yes, ideally you should have attempted the mock examination before tomorrow's session. Arvind, this is not segregation of duty. I think this is actually lack of planning that they are reviewing on the same day. Yes, and we shall discuss few things in the mock. Okay, so if I will. Don't worry, Ishfaq, we will try to cover them up tomorrow. Don't worry. The mocks have been sent to you people. Please go through them. Yes, very today is the last lecture. Okay, what I would want to do is that I want to go through the marking scheme of this question. Okay, here you go. Let's just see this. It says quality control, ethical and other professional issues, generally up to 1 mark for each point explained. Now materiality should be reviewed as the audit progresses. We talked about this matter. Then it says insufficient audit evidence obtained in relation to packing machine. 1 mark for materiality, I talked about it. 1 mark on physical verification, then external confirmation, whether distribution company is related party, because I talked about the debiting companies. Managing director is responding. Then it says lack of organization and inventory count should have been discussed with management. Tax count should be extrapolated. Auditor staff may need training on inventory count attendance. Inaccuracy of clients' test count should be reported. Insufficient review performed by audit manager. Review left too late and should be ongoing during the audit. Self-interest threat. Matter should be investigated, notified. The audit partner lacks integrity, maybe something has to hide, partner has to be removed from the audit and so on. So you see, that's how it is. You need to actually think in general and you can find a lot of points. You don't have to be like a specific. Mock has been emailed to everybody. Hein, we are meeting up tomorrow again. Don't worry about that. I'll share the tips on the WhatsApp group also. I haven't had a chance to go through it because it's being provided by ACCA, so I don't know. Well, you have my number. You can send a cross message to me. I'll share the link to you. My number is 03312366161. Abir, I will discuss other things also. Don't worry. Yes, Sanya, I will. Okay, we are having a final session tomorrow, so we'll summarize a lot of things. Don't worry, Darwin. Looking forward to seeing you, and thank you everybody for your time and for being patient and for listening to whole of this session. I hope that things are gonna work out well for you people. I think it's of 2 hours. Kofi, please send across a message. Hey, no, not very tired. I'm enjoying it. Thank you to you people for listening to me. Wali, I'll just check. Rana, I'll cover up forensic tomorrow. Zamana, you need to send across an email to that Khurram Iqbal's email where you get the other emails from. Thanks, Ishfaq. Sani, I think if I could recall, you've studied, I think, a subject P5 from me. Okay. Jesh, these recordings have already been uploaded. There is going to be a mock exam that's being emailed to you. We are going to be discussing that mock exam tomorrow. Yes, Wali, I'm from Karachi. Yeah, the lecture has ended. Thank you very much, everybody. If you can call me, say tomorrow morning. Okay, thank you, everybody. Thank you for your time. Thank you for everything. Thank you very much.